Hey, it's Michael Saul, but everybody calls me Tiny, and this video is shorting the next Russell rally, plus a look at Mr. Softy. This is stock market analysis for the week of August 14th, 2017. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name and best email address, hit the sign me up button, then go to the email you used to sign up. Look for an email from me with a link that you must click on in order to confirm that you want to receive information from me. And then you're all set. You'll start to receive emails from me. Okay, let's take a look at the S&P 500. So, last week overall, let's look at the market overall. We had a down week, but look at the S&P 500 using the SPY as always as my surrogate for the S&P 500. We broke out of this coil, which we were looking for, but very poor close, and then that led to a decline. We had a small up day here, and then a small up day here, but overall, down really ugly Thursday, closed below the 50-day moving average. But besides just looking at the moving averages and where we closed, if you want to draw a trend line here, it's always good to measure the trend with a trend line. But even if you don't draw the trend line, that's not really because you have some wash through here. Let's see if we can, there we go. Okay. You still have higher highs and higher lows. So we are still in an uptrend. We haven't made a lower low followed by a lower high and then another lower low, which would be considered a change of trend. And of course, that change, or I shouldn't really say change of trend, more of end of a trend. And then, what happens when a trend ends? A lot of people think, well, we start going up, we stop going up, we start going down. Not always the case. Okay, when we hit a stopping point, we can go sideways and then continue higher. We can reverse, of course, or we can just go sideways and build out a range for a while. But right now, still in an uptrend here. Okay, let's look at the NASDAQ. Also closed below the 50-day moving average before remounting it on Friday. I wanted to look at a measured move here. And if we take this down to here, this is all one candle, and then we look at the correction, and then we take this. This is really kind of the guerrilla way to do a measured move. You could do it with Fibonacci tools, everything, but this is the way that anybody could do it. It was just a trend line. You can see we've already exceeded the measured move, but we did close back above it. So I always like to look for symmetrical relationships. I don't bank or hang my hat on it or bank on it that they're always going to hold, or that, oh, this will equal the last pullback. But it's always good to use as reference points. Always good to use as reference points. Also, higher highs and higher lows. Like, look at this. Okay, remember what I was saying here about a possible lower low. Okay, this was a higher low, then it was a lower high, then, here's the lower low, but never really below this previous low, just this minor low, and then we don't put in the lower high from there, we go higher, so there was really no end of the trend here. This was just a continuation pattern. Remains to be seen what we're going to do here. I know a lot of people are already putting the fork in the market, saying, oh, okay, it's over, that was it, and I just don't understand how they can do it. I read a popular Elliott Wave guy, and he was calling, okay, that's it. But, I don't know about him personally because I haven't watched every call he's made, but a lot of Elliott Wave people have been calling the high for years and getting basically carried out right in the market. And I don't mean to snicker. It's, in my opinion, I think it takes courage to get in there every day and give your opinions and all that. So I'm not making fun of any of my colleagues or the people that do what I do, but it's just, it is a little, with the Elliott Wave, with the diehard Elliott Wave people, and I'm not saying, if you've been watching my videos, and I like Elliott Wave, I respect it, but some of the diehards, the S&P 500 was hitting highs years ago, and they were still calling it a correction. It just, sometimes I just don't understand. Anyway, okay, so a little off the track there. So let's keep going. Mid caps. Yeah, so the mid caps came back down, didn't quite get the 200-day moving average. We'll look at the Dow real quick. It's holding up the best. It's still not even below its 20 EMA. And then let's look at the Russell. And if you see here what happened with the Russell here, the Russell has had the biggest decline chart-wise off of the high. Still, bear market, no, and it held the 200-day, that's great, but based on the momentum leading into that 200-day, I'm going to be watching the next bounce for a shorting opportunity on the Russell. I'm either going to look at the Russell itself, the IWM, or I'm going to look at a leveraged inverted stock, ETF, sorry, to take it, or maybe I'll go through the Russell stocks and look for some of the worst looking ones and looking for them to short them on weakness. Okay, but I don't know if it's going to start a bear market or it's going to tear through the 200-day, but based on the momentum down into this level, to me that says that the next push up should be a shorting opportunity, at least for a trade back. Okay, I'm only looking for a short-term trade on that. So get on the email list, and I will talk more about it if that situation comes up. But I'm going to wait for a couple of days of upside. All right, let's look at some individual sectors. Semiconductors, never really could get out of their own way here. They came out the downside of the triangle, then came back and kissed the underbelly of it, then came back down here. So not really doing much. Let's look at some of the stocks. Cloud Tanker still under the 200-day, but trying to hold on. Here's NVIDIA. Okay, let's look at this gap right below a 50-day moving average. See if this consolidates and continues down. Intel, more sloppy than anything, but it is above the key moving averages. How about the banks? There we go. So the banks back below their 50-day moving average, not looking super here. Here's Bank of America back below its 50-day moving average. More of a range now than a strong trend either way. Here's Citigroup, which had been one of the stronger ones. Looks like it wants to test its 50-day moving average. JP Morgan looks like it wants to test its 50-day moving average. Here's Goldman back below the 200-day, but holding the 50-day. So you can't really say this is broken away from the 200-day just yet. It tends to dip below it, but really until it starts trading, expanding down below it, you could still call the 200-day support. Looking at the XPD, which Goldman is part of, test of the 50-day moving average here. Here's Morgan also with a test of the 50-day moving average. Biotechs. So the biotechs popped up to a new high. Talked about this divergence up here. Came back down here, and it looks like home base is down here at the 3,700 area. We'll look at Biogen sitting on its 200-day moving average. We'll look at things like the XBI and the IBB. I mean, they all look at the same. Here's Labu. So not really doing super terrific here. I think Labu did hit its measured move, which was up here. So it took a while to get there, but the measured move off the triangle. Let's look at some of the glamour stocks. Here's Amazon, sitting right at the 950 area, which is support. If it breaks down below that, watch that 200-day moving average. Appalicious consolidating up here. Alphabet, sloppy. That's Google, by the way. I mean, I know it's Alphabet, but always be Google to me. The Facebook consolidating up here at the highs. Looks like a little zigzag pattern there. How about like a Netflix? Watch the 50-day moving average for a test. How about Tesla? So Tesla, everybody was putting the nail in Tesla. And then look at this nice push up off of the 300 and whatever area this is. Was it 304, 303 area? Nice push up here now. It's consolidating. Could be a lower high here, and it could continue lower. It could be an A down, B up, and then a C down. I mean, you got a zigzag up and corrective B wave. Maybe it's going down, but right now it is above the moving averages here, and it's consolidating. So wait to see which way the consolidation releases. How about Caterpillar? Still hanging out up at the highs. Here's John Deere. Popped to a high, but then reversed. Watch the 50-day moving average. Bonds consolidating here, but a lot of people are trying to time this bond market. I don't see a signal yet. Okay, but could it base for a while and then start to show some impulse? Absolutely, but got to wait for that second part for it to start showing some impulsive moves. Here's oil. So oil using USO consolidating. It's between its 50 and its 200 days. So there's really not much to talk about trend-wise until it gets above the 200 or below the 50. And look at gold. Gold is ready to rock. Why? Well, there's a lot of saber rattling. Talk about going to war against North Korea. So it's catching up. I mean, the market is definitely seeking some, flight to, I guess, quote-unquote, safety here. Gold tends to go up in speculative times. Still, gold miners are not above 24, and that's what my buddy Mike Swanson says we have to watch for on GDX in order for people to start getting back interested. But you can see the GLD, gold is coming up, a little flight to, hey, let's get into gold, because who knows if we go to war, what's going to happen. So what is the plan here? Well, the plan is, will this uptrend stay intact? Will we get a pivot off of here? I think we do get a bounce, but like I said, I think the Russell is a short off of the next bounce and for a trade. Okay, I'm not saying, it's going to be the bear market entry. I'm not saying that, but I'm going to be watching for a few day bounce. I'm going to be watching for a reversal, and then I'm going to be looking for a potential short-term opportunity. Get on the list if you would like more information at attackthemarkets.com. To contact me, if you have any questions, tiny@attackthemarkets.com. Have a great trading week. I'll talk to you in the intra-week emails or in next week's video. Okay, I forgot to talk about Microsoft, so I'm adding it in at the end of the video. Apologies for that. Okay, one stock I said I would look at, and it's the one I forgot to talk about. Okay, uptrend here, Microsoft. Nice and strong zigzag pattern down this time, which is what's known as a more complex correction. And this is more of a simple correction, basically a straight pullback. But you do see a little zigzag here, just not as big as this one. Held the 50-day moving average and pivoted off of it. So I'm watching Microsoft on the long side if we do get a bounce. Like I said earlier, I do think we get a bounce. So I have no problem looking at Microsoft here for a long side opportunity if we do start to get going. Okay, use a trend line. Let's see if it breaks it and gets rocking and rolling. Target would be new highs up above here. So it's not a huge point move, but Microsoft doesn't usually move that kind in that kind of way. Okay, have a great trading week, and I will talk to you in the intra-week. Like I said, the intra-week emails or in next week's video.